All right, we're rolling. Um, we're going to go over trading plan rules. So this is going to be quite a bit. I just posted this in the chat for you, so you can have a copy of this. This is kind of back testing, kind of not. So this is going to be a little different. Um, Trading plan rules to me are like your business plan. It's like, this is how I'm going to run my business. These are the rules that I'm going to use to run my business. Um, and that's how I see it. And so you have your playbook rules, and we'll go through those first because that kind of ties in with the back testing. So when you're back testing and you're trying to build your playbook rules, you can kind of get an idea of what you're looking to do. I'll share my playbook, uh, and you can kind of get a representation there. And then some other rules that you are good to have, um, like I said, like a business plan. Um, I got a quote from someone I heard. It said, "Your job is to identify, not react to what will, and not." Sorry, I said that all wrong. Your job is to identify, not react to what, not to wait and not jump. I kind of butchered that little saying. Sorry. Um, so yeah, it's like a business plan. So we want to talk about playbook rules. First thing in the playbook rules will be your setup. The setup is, we already know that we have a 3 touch point trend line, or we have a 2 touch point trend line, that's a setup, but it can be a little bit more than that. Part of your setup for me is my risk is assessed. Before I enter the trade, I know how much I'm risking. I know that that risk is either 1% up to 2% of my budget. I also know in that risk that the setup is there's no support resistance levels in my way, no other trend line in my way of the path I'm seeing, and that if I get in and I have a 1% risk, that I'm going to at least make 1% on before it hits a support resistance level and turns around. That way I know that I'm getting into this trade. It's not only within my risk, but at least I can make some money that's equal to the risk I'm taking. My hope would be that it goes past that support resistance or that trend line that's in my way. So looking at those things and having that kind of risk assessed is part of your setup. So that's, to me, I want it low risk. What does low risk mean to me? It means all those things. You want to see price action. I have previous video we did that was on price action. What is your price action rule? I have one. I say retest slash pause. But what that is for me is that means that I'm getting a clear reversal reaction prior to it breaking or after it breaks. Most of the time prior to breakout. If you use an indicator, is the indicator aligned with what is required for that indicator? I used to use them. I don't use indicators anymore, but if you do, does that have to be a certain reading for you to say, yes, I can enter? Um, Trend requirement. Do you allow yourself to trade against the macro trend of the instrument? Um, do you allow it to trade when it's in a sideways or in jail? If you guys know my wording, um, so you need to know if that's a rule. So I allow myself to trade against it, the macro trend, but I have a rule. If it's against it, I can only trade 1%. It needs to be have room, and I'm going to probably have set a take profit at a support resistance level um, instead of letting it run, because I'm against the trend and there's a better chance that it's going to come back at me. So I want to just get a good, good profit and move on. And I don't trade in sideways. If it's in gel, I can't trade it. So that's a rule. Market behavior. Is the market behaving bullish or bearish? This probably is more affecting, well, this actually affects all time frames. I feel like it affects more the hour and the lower time frames. The higher time frames, the 4 hour, can be a little bit indifferent on that, but I still try to. I still want to see if I'm taking a long trade, I would like to see the market bullish. If I'm taking a short trade, I would like to see the market bearish. Uh, News events, contract changes. These are part of your setup. Is there a news event coming up? Is this something you can trade with? Is this something you're not allowed to? Having this idea of like, okay, I can't trade during a news event because I trade the 5 minute and it can affect it really big. I have to wait an hour after a news event. I have a contract change tomorrow, and I'm trading the 1 hour, and I may have to hold my position. So I need to not trade today and trade tomorrow because of the contract change. So knowing these things and having rules set will help protect you so that when you go to play, you know exactly. You're not trying to guess, oh, should I trade? I know there's a news event, or oh, there's a contract change tomorrow. Maybe shouldn't get into this trade. It's not a maybe. It's no, oh, contract change tomorrow, don't trade. I just gotta wait. There will be new trades. Don't need to take it. So that's your setup. And I'll give you let's go through a quick review of that. So if I was looking at my 2 touch point trend line breakout and my rules, I have my setup. Now for me, my setup's pretty simple. And a lot of this is because I already know a lot of those other rules are hardlined. So I have retest or pause before breakout, or retest, pause after break, and low risk. This is my setup. I know exactly what this means. It means I've got a clear, defined reversal happening to make that breakout. So that's where that's coming from for setup. Entry trigger. So this is everything that the market says to you, oh, here's my trade. The market's saying, look, here's your trade. It's setting up. It's setting up. It's not necessarily what you enter on. Now you get it. You need an entry trigger. This is what needs to happen to enter your trade. Do you enter as the candle breaks a trend line? Do you enter when the candle closes? Do you enter above or below a last high or low wick, which is one that I use? So what point is it that says I enter here? I have my setup. My setup's sitting there saying, the market's saying, look, here my setup is ready. So now all I need to do is have my candle make that move and get to that point where my entry trigger is set. Give you an idea of an entry trigger. Let's see what I can do here. I did not pull it up. Let's go. Be patient. There we go. So for me, right here, this was my entry, and it was just below that wick. So I didn't enter I did not enter as it broke. I set an entry here below the wick of the last low. So that was my entry trigger. And I set that. I actually set a stop entry so it automatically, once it hits it, it goes. And so that would have been my entry trigger. All right, trade management. This is the one that, for me, I have found is almost, I feel like it's harder, maybe because harder than the setup. And I say that maybe because I focus so long and so hard on the setup that I understand the setup more now. But now I'm getting into the trade. What do I do now? What, what happens now? Uh, the trend line system says you either get out at support resistance level, or you get out if you break your safety line. And all those are good. You can get out on a level of tick. So trade management, what to do when you're in the trade and to exit. So what is your trailing rule for stop loss? So if you got, and I got some great examples of this later. So if you're trailing the safety line, what's your rule for that? How much wiggle room is that allowed? What does that look like? Understand that, know that. Exit rule for closing or scaling out. If you're closing a contract, or if you're going to scale out, let's say you went in with 2 contracts and you want to scale one out. Well, where do you scale that out? What would be the rule you would have to scale out? Rules for scaling into during the trade. Are you going to scale up in your trade? Are you going to add contracts? If you are, what is the rule for doing that? What are you going to look for? What's going to make that happen? And I can show some examples of that. And then what's your rule for reducing risk? You're in a trade and it starts turning immediately down on you. What do you do if the trade breaks down? This is all something very personal. I can show ideas, but you got to back test this to figure it out. What does this look like? So when I'm saying that, what does it look like when you've concluded, oh, my trade is breaking down, it is not working, time to exit. So you got to know what that looks like. What are the signals, the candles, the price action happening that's telling you this isn't happening? Do you allow the reverse button? I don't, and I took a trade last week, and it completely turned around on me, and I hit that darn reverse button. It's probably the 3rd time I've ever hit it. It was a little reactive, and it was against my rules. Once I got, it was going hard and fast, and so once I got to break even, I cut the trade. I didn't want to make money on it. It was against my rules. I want to get out of that trade, and I'm just glad I broke even. Because for me in the 4 hour, hitting that reverse button can be pretty dangerous. So I think of the 3 times I've done it, 2 have been break even and 1 has been a loss. So I really don't care for it. But in a 5-minute time frame, 15-minute time frame, maybe you're good at it. Maybe you can hit the reverse button, but what's the rule for that? Why are you allowed to? What rule are you putting in place for that? So having these different little rules, these different little no's, helps you when you're in a trade to be a lot more calmer, because you're ready to take on whatever's coming your way. Now I want to do a couple of little things here for risk management. I've got, so one of our TLT students, he's in uh, level one, stage one, I'm sorry. And he has adapted a trailing method, and I wanted to kind of go through it. He allowed me to use his charts. His name is Arslan, and he's doing really well at paper trading. It's all paper trading, and he has some very. I asked if I could use his charts because he's got some very detailed uh, trailing methods that I thought were really neat. So he writes up here basically a good idea of what's happening. He knows where he's entered. He's got his, this is him trailing his stop loss. Initial stop loss, trail stop 1, trail stop 2, and he's putting in how much he's made, trail stop 3. And then he got out here. And got out before the safety line, which is, there's nothing wrong with that. He saw that he had an upper trend line. It was breaking the upper trend line. It came back below that upper trend line. It was done for him. So he had that figured out. Here's another one of his trades. He came in with a steeper dotted line. I will do this too with a steeper safety line. I'll dot it. It's preliminary. It's according to how far it's come down from the original line and how how the sideways movement's moving. So he says remove this initial steeper safety line. Again, he has his kind of a general idea of what happened, and he's got his trail stop. Here's his initial stop, and his trail, and his trail. And so if we can see, this one was a lot clearer. He took this first big pullback and he said, okay, I'm putting one stop here. That's locking in profits. And then he came down, he got another pullback, and he moved his trail up here, locked in some more profits. It comes down, pulls back, he gets another one, crossed his safety line, and he exits. Again, he's got his whole thing. He's seeing his draw. He's seeing his play work out. He's seeing he's got. He broke all-time high, so now he's like all-time high. He's tracking his all-time highs during it, and he's trading a 5-minute time frame, by the way. Here was his initial stop loss. He trailed up here. If you notice, he's really going to the low. It's made a new, like a point B, and then it came down again. He's trailing. Goes up, comes down again. He's trailing. That's his wiggle room. Once it takes off again, comes back, that's his next wiggle room. And he does this all the way up on his 5-minute time frame until it exits. I think we got one more. So here again, he's got all this. He knows where he entered. This is a pretty steep move. He allowed this candle to come down. He had a trail stop here. He allowed this candle to break down and play out. And that's when he moved his stop up to it. And then it moved up, and then he moved his stop up again and again. And then up here at the top where it broke a support level. All right. Oh, I wanted to show you one for scaling into or out of a trade. So let me show you one of mine for that. I'll show you my current one, which was a loss. So in this one here, I had already, before the trade, before I even got in the trade here. Again, I entered above this level here. I entered right above there. I got in. I knew this was the old sideways movement above. So we had broke down and out of it and we're coming back into it. So this was the old gel here. And so I knew if we broke this level here and I got a good signal of a reversal. I call this a bump and run. It comes down, bumps, and then starts running again. I got that, and so I came in at the height of this last white candle, and I added a contract. But I knew this was going to be my add target, so I added a contract here, and it started looking really good. It just collapsed. It tried again. It collapsed, and it stopped me out for a small loss. Had this continued up, I would have scaled out here one contract, and I would have let the last one run and see how far to go. So that's a way of adding in. Another way I add is I will take a point B, like this point B right here, and you can see that it actually worked with what I had planned anyway. So this is like a 2 touch point trend line, and it's almost making a new break of a 2 touch point trend line with a support resistance level. So it's almost like a play in a play. So that's something I do for scaling in. And I only do that, mind you, if I'm still not, if I get into this trade here, I add this contract, my stop is still within my 2% risk. Because I've probably, I'm not holding my stop down here anymore. I'm up here. So if I get into here, my risk has not exceeded my 2%. So I never exceed my 2% when I scale in. All right, real quick here. I like to try and get this part. These are other rules. Oh, I wanted to show you. Hang on. Playbooks. So here's what my playbooks look like. So I have my setup, and this is the setup I want to see. I also have, it says entry criteria 3. It's actually, should be an additional confluence. So the support resistance level, that's an additional confirmation. If was the candle a full candle after breakout, that's a strong sign. And I say that as in a not a little tiny Twizzler type of candle after breakout, but a good candle. And then was it a strong candle at breakout? And strong candle to me means that 50%ish of the candle is on the breakout side of the trend line, and it's a good strong candle, like it's bigger than the normal candles. My trade management, if it's against the trend, I exit at a defined point. If it's with the trend, I can trail by candle. If it's with the trend, I can add at defined points. So I can add a contract at defined points. So after the trade, or even during the trade, because I trade 4 hour and it happens throughout the days. I can check these off as I'm doing them. If I'm in a sideways, if I enter the trade, but goes into a sideways trend after I entered, I can hold until the original trend line's broken, um, or it stops me out. So once the original trend line's breached, then it's time to get out. If I have a structure breakdown, I exit after it created a new point B. So if it shoots up, creates like a new point B for the trend line it broke, and it starts coming down back to my trend line, and this usually right in the beginning of the trade, I can exit. Just get out, preserve my money, capital, save my loss. Even if it turns around on me, I don't care. So that I can do on my structure breakdown, and I know what that looks like. And then move my stop loss to action line after 3 candles. So after a maximum of 3 candles, I move my stop loss to just below the action line. Again, I'm a 4-hour trader, so whatever you see here, back test it on your own time frame, your own instruments to make sure it works. This is stuff that I've back tested and proven works, and this is what I trade by. All right, last few other things. These are some rules that you should have. They're kind of written in your mind. You can write them down on a piece of paper if you need to. Start defining your business. This is very important to know, have to make it so you're doing the same thing. If you ever go to a McDonald's, you go to McDonald's in New York and you fly to Oregon and you go to McDonald's, it's the same thing. They have a system. They have a way of doing things that's always the same because that's what makes things work so well. So have your instrument back tested and proven to your trading playbook. Have one playbook, 2 or 3 instruments. Make sure your playbook works in all those instruments. I don't trade oil. I used to. I loved it. I thought it was going to be great until it didn't work with my playbook. Oil and I couldn't get along with my playbook, so I don't trade it. Have a specific time frame to trade. Stop hopping. Don't go to the 1 hour, the 15 minute, the 5 minute, back to the 1 hour. Pick a time frame. Learn that time frame. Get to where you're making money on that time frame, that you're consistent on that time frame. You've back tested and you can trade that time frame. Stick to it. When you are a profitable trader, then add another time frame if you think you can trade 2 different time frames. Just a suggestion. You can do whatever you want, but the more you can narrow it down, the quicker you will become profitable. Your trading time. Set a specific time you will trade per your lifestyle. Do not trade out of that. What is that? That's a specific market opens. I trade New York Open. After New York Open, Asian, I will allow myself to take a trade on 2 of my instruments because they move the most during the New York Open. The other 2 of my instruments, I will enter a trade if it's convincing enough. But I know that, and I have those rules. So yeah, or do not enter during these times. If you're a 5-minute trader and you have this time frame that is from 7 a.m. to 10 before you have to go to work, and you're going to trade that 3-hour time window, backtest that 3-hour time window, trade that 3-hour time window, learn that 3-hour time window, Stick to that 3 hour time window. If you have a day off and you think, oh, I'm just going to keep trading throughout the whole day, don't do it. Trade your 3 hour time window, go do something else. Stick to that. Learn that. Know that. Make it yours. Routines. These are rules. These really do. I have a set. I do the New York Open. I'm on the West Coast, United States. So that's 6:30 in the morning that the New York Open happens. I need to be up, done my meditation, done my yoga, had time to look and analyze the charts for the day for the setup. So I'm up at before 4 a.m. It's not a big thing. I've done that because I'm in construction for years. And I get all that done and I'm sitting at my desk by about 5:30 and I'm getting ready for New York Open. I know exactly what I'm wanting to look at when it happens. So have a pre-trading routine. Daily or trade risk level set. If you're a lower time frame person, you say I can take 3 trades a day. Know what that is. I've had 2 losing days. I need to reduce my risk. Know what that is. Have that figured out before the day comes. If you don't have that as a rule and you've had 3 losing days in a row and you come into the fourth day and you're like, yeah, but today's going to be different. I'll just keep my risk the same. I know I want to change that, but I'm not going to. And you lose again, you just lost more. So have a rule, have it set out, have it something set up. Here's some good ones. Am I tired? Am I bored? Did I do my meditation? Did I do my affirmations? Did I do my workout? Did I have coffee this morning? These can be rules. Like, do I trade when I'm tired? Do I trade when I'm bored? Bored trading can be very detrimental. Trust me, I know. If I got a night of sleep that was really bad because I have a stress job and I didn't sleep well, I note that when I set up my daily chart and my plan and everything, I literally tighten what trade I'll take and I triple check myself before I allow an entry. Being in the 4 hour time frame is easy because I don't necessarily take a trade every day. So having these rules are just as important as the playbook rules. Figure this out. Figure out what your rules are, dial it in, and start sticking to it. A neat thing to do, you can tag a lot of these things. You can put a tag up there if you were tired, bored, meditating. Did you get your meditations, your affirmations, your workout? Did all these things happen that day? When you take a trade and you won, you can go and actually have a set of tags for all this and start tracking it and see how it works. See if it affects your trading. So that's the trading playbook, trading rules. It's like a business. Good example I used recently was, let's say you got a restaurant and you got a menu and you've been in business now and you've been running everything the right way. You've been using the same menu, the same ingredients, and your best seller is a hamburger. But you decide to take and change the bun. You used to use these bakery buns that you'd get that were really nice and neat, and you thought, you know what, I need to save money. I'm just going to go to Costco and buy buns from Costco or Sam's Club or whatever big box stores you have. And you go and buy those and you change your bun. And it's okay for a week or two. And then all of a sudden your hamburger sales are dying off. And then you have a whole week nobody buys a hamburger from you. And you think, Well, I guess I need to change it. I know Joe's down the street sells chicken burgers, so maybe I'll just jump and start selling chicken burgers. You don't even know anything about chicken burgers. You've never sold a chicken burger. You made your money off of hamburgers. Instead of going back to your plan, back to your original plan, back to your original buns, stick with the buns. You completely change it. Now you're trying to jump into a market you don't even know. So create your business plan, get it worked out. And a lot of that business plan can be back tested, tracked, and tagged, and you get to see your differences. You get to see as you do your playbooks. You don't have to hit all of these. You can just watch and see how many times they do get hit. My strong candle gets hit 44% of the time. My support resistance level has been getting hit 33% of the time. My low risk gets hit 90% of the time. So I'm hitting them, and I can come back and I can check. And this is the beauty of TradeZella. You get to come back and check it. You get to come back and you get to check your stats on your playbooks. If I went to these stats, I prefer to see these stats off of my back testing. Gives me a better idea. My live testing still has a lot of emotions. So now I can see my results from my back testing, how many times they're hit. And you can track this and you can manage it. Amara, I posted that. Oh, I didn't post it. Hang on. There's the rules. So that's that. Let's go. We got 15 minutes. If you've been following me here the last few weeks, we've been working on MES in 2024, backtesting the 4-hour time frame. We had one winning trade so far, one losing trade. We'll take this and see if we can get another trade. We are at all-time high. So that was our winning trade right there. This guy needs to get out of the way. We're going to be creating a new point B here somewhere. We had an all-time high here. Now that's here. Let's see what we get. Let's play this for a little bit. See if we can get another trade today. I trade this by my setup, 2 times 10-minute intervals, 4-hour time frame. We're in February and we've had 2 trades. Welcome to the 4-hour time frame. 2 trades in a month and a half. Ooh. See, this is why I like to see the candle move. This is back testing, and I had candle anxiety. We're at 6 o'clock. This is when I usually set my time. This is my starting time. It was 6 o'clock. This broke this is really not even got a point B anymore. It was up here. So I'm going to eliminate this guy here. Now we have this trend line, and this trend line's 1, 2. This is 3 or 4. But we have a support resistance level right here. That could also go right there. That's it here, here, and here. Support resistance levels are very, very subjective. So if we came down here, I have no safety line, so that means if I have to took a trade here, my stop would have to be above the all-time high, and that's just way too much. So let's just move it on, see what happens. I'm having a feeling this might be starting to create a jail space. Look at that. Rejected off of that. Maybe? No, it's dropping. It's dropping, but I can't take a trade. I can't take a trade because there's not enough, too high a risk, and I honestly do not have for me a quality reversal, and especially with that candle right there, which now says I got to move this line here because that's now point B. So now it's a 2 touch point trend line. We'll jump this to the next day. It's going to be a while before this gives me something, so I'm going to jump it to the next day. Still at no point B for this guy here. This would be nice if it comes down right here. That'd be really nice. We can get an upper trend line. It's looking like it's failing. Then it's not. All right. About the end of the day. No trade. Still no point B. That was about the best point B I could get. Right there. We need this to go do this thing up in here. Don't break out. You guys see you see the gel being created here? I'm gonna take this guy down to here. I like this better. And then I'm gonna take that line and we're gonna make it dotted. And then I'm gonna clone that line. And I'm gonna put it right about here, just below. It's just lets me know that the all-time high is kind of playing. And there's my gel. We can take and this line, and we'll make that one solid. So there's my new gel. You guys see that happening? May not get a trade out of this. Although I like this symbol, this here coming down, if that would confirm itself. It's usually a pretty strong signal that it's coming down. You got a big candle, it comes back up almost all the way, and then you have another candle that clears it. It didn't quite clear the tail of that wick though. Jump to the morning. I'm going to jump to the next day. Nothing's happening. Don't break out. Bounce off it. Bounce off of it. There we go. Don't break out. I can't. So I didn't want it to break out because it's too high risk still. So we're kind of stuck there. Might just give me another point though. It did. So we can move that to here. Just spreads my gap more. Go to the next day. Don't break it. I don't want to break it. I don't want it to break it because I want it to get up in here so I can see it move. But we are in jail, so honestly, let it come down here and bounce before I have to move it up would be nice. Get it closer to the gel line so it can break out of gel. You can see in the 4 hour time frame, like this is a point B that some people would jump on and they'd just draw a nice tighter trend line here. But knowing that I'm in jail, I know that if I did that, just an idea, if I drew that line right here, I took this here, I really only have up to here to make money. And I'm probably entering up here. So there's not much room for me to make the same amount as my loss. So I don't even want to try that. And it's riskier because I don't have enough data. I really don't have a nice clean point B. So those are the things I'm looking at for my setups. Those are the things that I want to see. Where are we at? Skip to the next morning. Oh, doggone it. Look at that. It's going to break out all-time high. I don't have enough room for a trade here. Going to be another one down. Nothing I can do about it. All right, let's reset. We have a new all-time high here. This trend line's gone. We're almost got a point B for a steeper trend line, but I don't like how that looks. Give me something about like that. That would be nice. Actually, it would be nice if you could see this come back down here. We're gonna give it one more day here, and then we'll go to questions. It'll be a no trade week. I got a point B now. That was not a bad one there, but still a little too steep. I like this one because it's coming down to this gel line. So let's leave that. We'll leave that for the today, and